Well, let's keep it going with India, which is considering a policy shift that could require domestic refiners to hold significantly larger crude oil inventories. Now, this proposal is still in early stages and comes after the Strait of Hormuz disruption exposed the fragility of India's energy supply chain. In this next report, we dive into the numbers, the cost, and the plan ahead. Take a look.
India's strategic reserves currently cover only about 9 to 10 days of net crude imports, far below other major import-dependent nations. At the end of last year, India held just 21 million barrels of strategic crude reserves. China, by contrast, had 1,397 million barrels. The US held 413 million barrels and Japan had 263 million. Under the proposed framework, Indian refiners would be asked to hold inventories beyond the roughly 15 days of crude they currently keep. If required to double inventory to cover 30 days, they would need to hold a combined 150 million barrels. At current prices and exchange rates, this would cost refiners nearly 600 billion rupees, or about $6.4 billion in crude purchases alone. Additional investments of several billion rupees would be needed to build new storage tanks, a process that could take years. Industry resistance is expected given the massive capital outlay. Refiners are pushing for flexibility over storage locations and the ability to trade the crude commercially. Some experts point to Singapore's model, where storage near ports enables active trading in global markets. The geopolitical context is critical. India imports over 85% of its crude oil requirements, with about 40% transiting through the Strait of Hormuz. The near closure of the strait has disrupted a long-held assumption that proximity to the Gulf reduced the need for large reserves. India is already expanding its strategic footprint. The government has approved additional storage of 6.5 million tons. New Delhi and Abu Dhabi are working to expand UAE-linked crude storage in India to 30 million barrels from 5.8 million. But the gap remains wide. S&P Global Energy warns that while India's crisis management has worked in the near term, the episode has exposed a deeper vulnerability in the country's energy security architecture. New Delhi is racing to build buffers that match its growing economic ambitions. The cost is expected to be steep, but the cost of inaction could be steeper. Business Bureau WION World is One.